Hi, Minuteman 6 here for Minuteman Precious Metals. It's August 6, 2024 at approximately 7:55 a.m. Eastern Standard Time, and this is your morning market update. Before we get started, please hit that like button. If you're not a subscriber, I'd love to have you. I post new market video updates Monday through Friday, so just ring that bell icon to be notified of new videos. Gold is up $7.40 to $2,412.33 at the time of filming during overnight trading. Silver is down 21 cents to $27.05 this morning. The GSR is up to 89.22. The big news in the market still yesterday's sell-off in the equities markets, precious metals markets, and Bitcoin. No asset class was safe yesterday. U.S. stock markets fell sharply with the Dow and S&P 500 posting their biggest daily losses since September 2022. The Dow closed down more than 1,000 points, or 2.6%, and the S&P 500 fell 3%, and the Nasdaq was down 3.4%. At the same time, Wall Street's fear gauge, the Volatility Index, surged to the highest level since the pandemic market plunge in 2020. The VIX briefly rose above 65, up from 23 on Friday and 17 a week ago. At the time of the writing, the index had cooled to around 37. America's markets reacted to rising recession fears following Friday's disappointing July jobs report, which showed the U.S. economy adding only 114,000 jobs. The numbers fell short of the 175,000 expected jobs, marking one of the weakest job growth rates since the pandemic. The unemployment rate also rose to 4.3%, the highest in nearly 4 years. According to James Lavish, co-managing partner of Bitcoin Opportunity Fund, the current economic turmoil was inevitable, which will inevitably lead to more money printing and liquidity injections by the Federal Reserve, even as our national debt tops out on over $35 trillion for the first time. He said we're going to have to print money unless we want to go into a period of massive turmoil and a total reset of our economy. We just crossed $35 trillion of national debt. No matter what, all roads lead to more printing and more liquidity. You're going to have the Treasury and the Fed team up and start buying bonds again. There's just absolutely no way around it. If we do have a sharp downturn, there's no way out. So you and I, stackers, we know that debt leads to rising rates for our precious metals. So we can expect that in the long term. But what are we going to look at in the short term? So he said after keeping rates steady in July, the Federal Reserve should announce an interterm meeting cut prior to the market's September rate cut projections. That's pretty rare to do an intermeeting cut. The Fed has signaled that they're more than likely going to do a cut in September and possibly another cut before the end of the year. But to jump in and do an intermeeting cut would be unexpected. If it does happen, it will have a profound impact on the markets, specifically the precious metals markets. We've been expecting those cuts for quite a while, and we're just not exactly sure how much of those cuts are actually priced into the market at this time. So that's something that I look forward to see, is once we do get those cuts, to see how much is actually priced in the market. So U.S. markets, they weren't the only ones to sell off on Monday. We also saw a huge tumble in the Nikkei, the Japanese stock market. It dropped over 12.4%. That's their second largest decline on record and the biggest since the infamous Black Monday crash in October of 1987. The Europe stocks 600 also closed 2.17% lower Monday. All this volatility is going to create opportunities. And that's the biggest thing that we can do as stackers, is look for these opportunities that are created through this volatility. And when we see these opportunities, jump on those. mentioned yesterday, huge opportunity right here at silver at 27. I see that as an opportunity, but I'm also concerned about further pullbacks if we do actually enter a recession. There are quite a few recession fears here, and there's some technical data pointing to a recession at this point. So right now, even though the GSR is so high, I'm still buying gold and not silver. I may switch to silver at any point in time if I see some of those technical charts shift away from a recession fears. But right now, I'm still purchasing gold as for its stability as opposed to silver for its potential. If you made it this far, thanks for watching. Be sure to check out Minuteman Precious Metals for market updates and analysis. Thanks, and have a great day.